Okay, ready? 1, 2, 3. All right, so welcome to part 2 of the Newport Residences analysis. If you are new to this video, please go and check out part 1 before we hop into this analysis. In part 1, we covered the macro view of Newport Residences. Part 2, we are going deeper in the numbers. There's something bonus about part 1 where we covered the polynomial trend line, where we predict what is the completion PSF. Right now, we are going to be analyzing the new launches as well as the resale counterparts in the area, right?
Yep.
Interesting. If you are someone who's very new to District 1, this is going to be a perfect video to watch, right? If you haven't joined our Telegram channel, I'm going to keep blabbering on this. The QR code is there. Let's point at it. I don't know. I got it from yeah, it's right here. It's right here. So please go and join the community for good lobangs. Okay, Ken. All right, let's talk about the comparative analysis. The new launches that's in area, Chris. Let's talk about it.
All right. So for Newport Residences, quite a few new launches that they launched is almost fully sold. So surrounding, there's one at the direct comparative is One Bernam. It's actually just right opposite a 99-year, launching on average around 2.5 per square feet. Okay. Then you can see Avenue South Residences. There's already fully sold, along with Revere, which we covered later on, is only one unit left at one beta at 3,002 per square feet. So let's take a look at one by one. Okay, the direct comparative have is One Bernam. So One Bernam by itself today, it is only about 50% sold. Yeah, how do you feel, Jervis, about this?
Lovely. Waiting for the price to drop.
In fact, One Bernam, there's one particular greater issue is more about the layout.
Yeah.
The layout, a lot of them, they have a lot of wasted space, extra big area. So actually, although the PSS seems cheap.
But it also sounds familiar to Newport, right? There's a lot of the AC ledge and a metal canopy here and there.
Yes, indeed.
Yeah.
But a lot of them, have long walkway. So in the end, a lot of the layout is not as functional as it is. Yeah. So although the PSS seems cheap, but the quantum is not as great. Because a 2-bed 1-bath, something are going close to 1.9 to 2 million.
Yeah.
And that's something that we can access later on in terms of the One Bernam side. But in terms of One Bernam wise, the break-even price is about 2,264 per square feet. Okay, currently it's only going about a 2.5 to 2.6 per square feet.
Not very far off the break-even price, right?
Not very far off. Yeah.
And the developer hasn't been increasing price that much ever since 2017,
2021,
sorry.
Launch.
And just 12% increase there.
Yeah,
not much.
It's quite decent.
Still 50% unsold.
Yeah, 50% unsold. Yeah. And a lot of them, they actually belongs to the one bedroom. Some one bedroom are going 3.2 to 3.3 per square feet.
Wow.
And there's some things that they are confident to sell in the long future, but nonetheless, it really depends on how it goes. Because there's another, 2019, you add a 5-year period.
Yeah.
The EBSC timeline is around mid of 2024 mid of 2025 to be exact, 5.5 years. Yeah. So, all right. So, there's something to take note. And in fact, the One Bernam, we take a look at some of the PSF, the 732 square feet. Okay, take note, this 732 is actually a 2-bed 1-bath.
Yeah.
They are going at 2,004 to 2.5 per square feet and going at 1.7, 1.8 million. Yep. So just take note some of the key concept. When they first launched, about 24-25% take-up rate. First year, 27%, not the best. And only second year, which up to now, only 49% take-up.
So according to the freehold premium that we calculated in the first part, in the previous video, right? It's about 18+%, right? So the average price of a freehold counterpart, the good price will be about 2,009.
Okay,
right?
3,001.
Compared to One Bernam, right?
Yeah.
So if anything higher for Newport, 3,637.
That's something that he must consider twice, especially One Bernam is doing as well.
Not twice, not thrice, not 4 times, not 5 times, but 150 times.
150 times.
I have no idea. I just give a exaggerated number.
Okay, I thought that's a significance.
No.
Very good.
Yeah.
Okay, but one thing to note is because One Bernam, as I mentioned, our layout is a very big problem, which you can see 732 square feet. It's a 2-bed 1-bath. But one thing, perhaps, in fact, for this Newport Residences can actually play out One Bernam is in the layout, because you may remember the 1-bed, a 2-bed 1-bath is 6.6 square feet.
Yeah.
So although the PSI is 3,000, you may end up about same quantum or
because
slightly
of
higher.
the spaces.
Because of the spaces. So it may end up giving, it's like how Continuum gave the Busugram
a good fight.
A good fight.
Yeah. So
Yeah.
if you are interested to understand the difference between Newport Residences as well as Continuum, right, you can always let us know. Contact us via the WhatsApp number that we have provided right here. Let us know. We can pull out the floor plans and do an apple-to-apple comparison for you as well, so that you have a better clarity before you buying any place in D1.
Yes, indeed. All right. Okay, so we can see currently what are the remaining units left for a 2-bed 1-bath. Okay, 732 square feet. You can see it's 1.918 million.
Yeah.
Okay, these are the remaining units there. Most of 1.7, 1.8 is already fully sold out. Yeah. The price are moving. And typically, next one we can take a look is at Avenue South Residences.
Fully sold.
Fully sold. Good news, okay.
Yeah,
so it's in between, with Tanjung Pagar and towards
Bukit Merah,
the Bukit Merah area. Yeah. And typically, you can see some of the transaction price. Yeah. For a 2-bed, 1-bath, 2-bed, 2-bath, they're going almost 2003 minimally.
And these are the 47th floor, 55th floor units that can put a strong fight against Newport Residences, just that it's 99 years in status, not freehold. Yeah,
correct. Yeah. In fact, fun fact, when I first bought, I said when I launched, it was 1,008 per square feet. People back then say it was too expensive. Yeah. And I still remember one of the seasoned investors also told us that don't go there, don't buy, it won't really make it. Yeah. But at the end of the day, it still get fully sold out, very interesting. Yeah. And the price had went up by 500, 600 per square feet.
Absolutely.
Yeah. So these are how new benchmark or land beats play out.
And this is also the reason why in investments we always do the comparison of the land bids around the area, because through the land bids you can see what is the future guide price. But you know that there's also this thing called the resale price gap analysis that JNRSA has done. And what we have done is that we are able to pull out good resale options in investments as well, seeing the crazy exponential increase in new launch prices. Yeah. So contact us if you are more interested in the resale price gap analysis. Okay. Yeah.
Yep. Okay. So next one we have Revere. Yeah. Revere is also almost 99.78% sold. Last 1-bedder unit, 3,002 per square feet. If I'm not wrong, close to 1.6, 1.7. Yeah. 1.6 million in terms of 1-bedder. So these are things that I guess it gives the developer a stronger confidence to launch at a higher price. Yeah. Okay, and the 2-bedder, you can see 818. Okay, square feet, 3,032 per square feet. Last few transactions, going 2.5 to 2.6 million. If you think about it, it's a 99-year at Singapore River, not the nearest to MRT in fact, but it's a better location. Comparable. Yeah. But 99-year going at 3,132. Yeah. That's why the whole idea of launching at 3,600, 3,700, developer had confidence. But once again, for us, we need to be more prudent. Absolutely. The way we invest rather than just going with the hype. Purely investment angle, I think exercising prudence is important. If it's for own stay, of course, it's based on your own taste and preference. Yeah. Yep, correct. So let's talk about a little bit more about the comparative analysis of the resale developments nearby. I think our clients have bought a couple of resale developments in D1 areas, some of which their rental was able to cover their mortgage and even have a few thousand in pocket money every month, right? So, hey, you tell me about Newport Residences, you tell me about the PSF. When I see our clients buying places where they can have pocket money every single month, of course, I'll just go for the resale options rather than launch. So let's talk about some of the resale comparatives. Okay. So resale comparative, there's quite a few resale going around. The nearest one is, One Bernam is what I mentioned as a new launch. The nearest we have is Elts, a 99-year Eltes. Eltes. 1,009 per square feet. But some, if you know, Eltes, the layout-wise is big bedrooms, 90 square feet, 900 plus square feet. So these are sometimes PSM may also be a little misleading. We should go into that later on. Yeah. So what I'm seeing in District 1 is that because of the so many different unit layouts in the different developments, right? It's not just about a PSF play. Neither is it just a quantum play. It's very focused on the livability of the space because it's one of the barrier entry why people don't stay in D1 and also eventually the exit strategy of the demand in the specific unit layout. That's what we are seeing. And this expertise comes from the mixture of both investments, seeing the capital gains for D1 resale homes or even new D3 homes that we have bought and made money, and also the selling operations that we have. When we hear D1, when we hear D2, the heart beats faster. If the PSF is bought wrongly and if the layout is odd shape. Correct. In fact, D1, D2 fun fact, they used to go up to 2.7, 3,000 per square feet for a long time
Back
ago.
in when?
Back in
2010,
2011,
2012, bullish market.
market. And after that, it went all the way down to now close to 2,000 for some. So that's something that for now, okay, that's my own perspective. I mean, there's actually opportunity right now because we know that the foreigners are coming back, and the PSF or what we see in CBD is same as OCR region. It is first time a lot of times we haven't seen this for a long time.
Everybody hopes to have the Marina Bay transformation story with the kind of capital gains that the state of Marina has enjoyed, right? Yeah, I understand that.
But of course, it remains to development. Some development may not appreciate it as much.
Yes.
So once again, if you have any question, feel free to approach any of our realtors. I think they're more than happy to validate to you.
Absolutely.
Yeah. Okay, so meanwhile, next one we have Skysuites Anson. Very interesting, 2,001 per square feet. Icon, okay, it's older, so it's 1,008 per square feet. But once again, the bedrooms are bigger. Sensei Shenton is a small development, 1,009 per square feet. Lumiere, even tinier development, 1,007 per square feet. So these are some value traps that we notice. Even though PSM is since low, but when it comes to transaction, not enough. So typically, you will not get the gains that you want. Eon Shenton, another small development.
Well known, Eon Shenton.
Yeah, Eon Shenton.
For
losing money.
Yeah, okay.
It'll be a buy at 2.6. They were promised of the sea view. It's still having a nice sea view, but in the end, people, very small development, but it's the wrong entry price, end up dropping price to 2.3, 2.4.
We have sold District 1 sea view units just recently, and we are seeing that the owners are not able to command even up of the valuation price because they chose the wrong unit. And not only that unit eventually in front, there's going to be transformation, it's going to be blocked.
Yep. All right. I noticed that Quantum. I realize a lot of people buy the wrong Quantum in CBD. They buy big units and the PSS seems cheap, but it's a value trap.
Because of a lot of wasted spaces.
A lot of wasted spaces, bigger bedrooms. But in the end, when it comes to selling, a lot of people buying in CBD, they are more investors, number sensitive. So when they exit, they couldn't find a clear exit strategy into the quantum play. So it's something, we can discuss more when it comes to one-to-one discussion. The Aries, another freehold, okay, the closest fight we can have, but it's a tiny development. Less than 80 units, remember? 50 plus units only. A little rundown at 2,001 per square feet. So these are things to take note. International Plaza is a little old already, 1970. They tried to go for en bloc, but the price is asking they're crazy, so unlikely to go through. 1,002 per square feet, big size unit, but on average, in terms of comparative wise, it's close to 50-year difference as 99 years, so can't really compare directly. Okay, and last one we had the Beacon, very interesting. The Beacon is a mid-sized development, 1,006, 1,007, but very big floor plate in terms of the two-beders. So once again, you must compare quantum. Okay, so
this shows Chris's expertise in District 1. He knows exactly how each unit looks like and how the development looks like. We have toured most of them. And Day 1 is a very interesting place.
Correct.
Developments that make money, developments that lose money, developments that can be sold very quickly, developments that cannot be sold at all. So it's unit specific as well.
Yes, very unit specific. So that's something we can dissect a bit more. So resale price gap estimated about 18.8% freehold premium. Okay. So it's something that we want to look at. But for us, let's take a look at some of the key elements for competitors in terms of Newport. Okay. So first one we have Skysuites Anson. Okay. This place itself, if you take note, it's a decent development, 360 units. Quite a big development. Okay, one of the, actually, fun fact, you know, it's actually the tallest residential building. Okay, Wally is the tallest residential commercial unit. So this is the tallest building in Singapore actually for residential. You go up, okay, maybe now, if you go and walk the ground, I mean, you'll notice it's a little run down. They're actually doing a full renovation. The whole construction place is down. Everything is doing revamp. So it's unsightly now, but I love it because that's when it presents opportunity, when revamp things will be different. And if you go up to the top floor, Sky Suite, you can look 360. Wow, you can see the entire Singapore.
It's like a sky deck.
It's quite nice. That's something that I really like.
I think I've done an unlock there before as well.
Wow, don't mention about it. Not the... Okay, working in progress for unlock. So 2.81%, typically, it didn't rise for the past 10 years, which some people may be a bit worried. Why? Why so? And it's something which is, I think, very normal. In fact, 2 years ago, 1 year ago, Tanjong Pagar wasn't in my radar until only recently. When I see that there's new land bids coming around this area, there's a new benchmark and the price in Singapore can support it, the demand can support it. So there's some things that, I mean, you can take it separate
Yeah.
in terms of that.
And the great thing about this kind of developments is that you see that the rental is high. At 5.33% is not too bad for a residential home.
Yeah. So there's some things you can keep a lookout for, especially.
So if you take a look at the 2.81% kind of like growth, right, in the past 12 years, right, this is something that you see the opportunity presents itself because you are still buying at a similar price tag back in 2011. And what Chris mentioned, right, there is postulation that demand will be able to support it. And with the new land bits around the area of Marina View site transformation, Greater Southern Waterfront, I think there's going to be that margin that people can play with eventually.
Yes, definitely. And in fact, if you look carefully at a 2-bed, 2-bath here, interestingly, 99 year, they are only going at 1.4 million to 1.5 million.
Interesting.
2-bed, 2-bath.
Great opportunity.
And this is something that is a great opportunity to take a look at. In fact, so this is one downside
even
of
a
Newport.
366 square feet at $880,000.
Yes,
Wow.
a studio unit. But as I mentioned, studio hard to exit. Not the easiest. High rental yield, definitely, but not the easiest. But if you love this area and you want to buy one, enter be 1 million. It's something that you can keep a lookout for, especially with the new land bid prices. 333 to 34.
Absolutely. Okay, let's take a look at Eon Shenton.
Okay, Eon Shenton is a very typical case of a failed development where the price had dropped by close to 20+%.
This is the first time I hear you say the word failed development.
Oh, sorry. Like a failure.
Yeah.
Okay, But then typically because it's a small development, 132 units, Eon Shenton, they sold the whole idea of, sea view, nice view, but at the end of the day, launched in 2012. Typically till today, you see, in fact, they actually still, some sold at 2.5, 2.6 for those selling sea view, but now they can't exit all. And these are things that you think, sea view is one thing, but it's more about entry price and understanding what is the supply and demand in the area.
So the thing about this kind of CBD areas is that there are always going to be a group of sellers who may turn a little desperate in selling because they've been in the market for years and they can't exit because of the layout that they buy. And this is actually, that's why you will see sometimes in the development, you'll see like greatest losses, right? Happening in this area, which is an opportunity to enter, right? And if you take a look at the next slide, if we take a look at the pricing of Eon Shenton, right? We are seeing this particular floor plan here, which is a 2-bed, 1-bath, 538 square feet kind of unit, right? Hard to exit eventually.
Yes,
right? In D1 specific, D1, D2 specifically. And you are seeing some PSF going as low as 1,006 in the sub-sale market. Yeah. So I actually have a question for you. Right. Yes. This is a question that a lot of the people who are maybe analysing D1 is curious to find out a bit more, right? So you are seeing Skysuites Anson enjoying a 2.81% profit in 12 years. That's analysing 0.1% plus per year. Worse than fixed deposit. You are seeing Eon Shenton appreciating by 1.5% in the past 11 years.
Wow.
Inflation easily eats up and doubles that. So a lot of the investors will be asking this question. Then why? Why that confidence to enter? Because it looks like the habit dying. Already, yeah, right? So why?
Okay, so for me, the times are different now. Okay, look at maybe 10 years ago and 10 years now. We look at two things. One is supply-demand curve, about who are the demands that's coming to Singapore right now. The policy has changed. The demand curve have changed, in fact, if you analyse D1, D2. And second thing is about more new land bits that come out in the OCI area. The Jong, or you see even in Seneca and Tanah Merah side, we're at 2.1, 2.2 per square feet. In fact, if those areas are going in that pricing and people are willing to take and buy the areas, that's something that we give confidence that in the future land bits in the RCI and CCI area, people are more likely to want to accept this pricing because of the rising inflation.
So wouldn't you be afraid that there is actually a demand problem in District 1?
Okay, so demand problem, you must analyse this population of white people to understand what are the intricacy of the future demand and where the people are coming from. Specifically
in D1 too?
Okay, D1 too. In fact, if you understand a little more D9, D1, D2 right now, in the market where people are converting in from foreigner to PR, and PR to Singaporean, and also the whole influx of family officers and the number of people waiting. In fact, they're just waiting to get a PR. A lot of them, what they want to do is they will usually like to buy a new launch. That's their normal buy behavior because they want brand new, and a lot of them just want the hype. So they went to buy. And there's something that I see in the CBD area and also in the District 9, 10 area, where people, since they want new, they set a new benchmark for the entire PSF of this entire place. And subsequently, because of resale price gap, you analyze, subsequently you see investors who are local, or rather some PR investors who are more financial savvy, they start to realize, why is there a huge price gap between the new and old? And that's how some of our clients, by understanding this resale price gap movement and analyzing what is the PSF, the pricing, and to layout even, we're able to hedge on this opportunity to make the profits. But of course, let's stay tuned 1 year later and see how it goes.
Yeah, definitely. I think that some of our buyers who have bought D1 with us this year did ask us these questions as well. And I think this will be quite a good question to pose, right? Especially when our director of investments are here. Personally, in my opinion, I feel that demand is not a big problem, because if you take a look at Skysuites Anson in terms of transaction volume, maybe you can pull back the slide for that.
Yes.
Yeah, you can see that back in the year 2022, there are plenty of transactions that happen.
Yes, indeed.
Right? And then if you go to Eon Shenton, right, you will see that 2022 and 2023, there are transactions happening, right? 2022, there are some transactions happening, right?
A small development.
And it's a small development. That's the reason why in our investment metric, we don't want to consider small development.
Yes.
Because when development is kind of small, very hard for you to see that kind of valuation increase, right?
Yep.
And another very interesting thing that you must understand is this. The reason why the growth rate is so slow is because these developments were first launched back in 2011 and 2012. So let's pull back the Skysuites Anson trend line. You can see 2011, let's take a look, right? So high peak, let's go on to Eon Shenton, 2012, right? Yeah, where market was bullish before the 13 rounds of cooling measures came in, and this is when you'll see the prices were at the highest.
Yes.
So if you were to plot, let's say for Eon Shenton 2016, when the market has cooled down quite a bit, right, till the peak, I believe you will see at least a 15 to 18% kind of increase. If Skysuites Anson, you plot back in 2017, maybe slightly lower. Okay, so my next question to you, Chris, is this.
Yes.
If you go and see Skysuites Anson, right, from 2017 all the way to 2023, why is there like a dip in pricing?
Okay, very, very good question. In fact, the pricing did not really dip. It stagnated for quite some time, because Skysuite, there are different kinds of layout. There's a 388 square feet, the smaller...
Super small.
398,
398, 366.
correct. So maybe during that year, there's more of this kind of PSF that's transacted. And subsequently, the two betas, they have of course a lower PSF. So naturally, it's that's why it creates this kind of a curve. So sometimes PSF, normal trend line, is a little misleading because they inculcate all the different layout.
They include every single kind of size. Right?
Correct.
And one thing you must understand is this, the supply in D1, when it comes to high rental yield units, are not high, because these owners, they are enjoying very good rental and they're not looking to sell.
Yes,
right?
indeed.
So this is our direction when it comes to buying a D1 home, right? It's like this.
Yep.
There is going to be a slight speculation that prices are going to go up in D1. Let's see 1 year later, 2 years later, how it goes. But most importantly, we have to mitigate against the speculation by buying a unit that has strong rental yield.
Yes,
and that's the reason, this is how we invest. Not asking you to buy a unit with a 1.8% rental yield and postulate that it's going to increase in price. That is just bullish, right?
Indeed.
That's just extremely speculative. So that's the reason why all the units that we buy in D1, for our clients, at least cover full mortgage, so they don't have to pay a single cent after putting a down payment, and that's super shook, because after that they can get a principal, or can cover rental and even have more pocket money.
Yes, indeed.
Yeah, so this is how you mitigate
so
that
defensive play.
Defensive play. Yeah. Adding the defensive play with a little bit more of a speculative play, right? And that's where you can get some of the margins.
Correct.
Okay,
in fact, fun fact, one thing to explain one more time about the transactions. A good example is this place called People's Park Complex.
Yes.
You know, their graph is up and down, up and down, up and down.
It's like a crazy heartbeat.
Yeah, it's like a heartbeat. Okay, the reason, because as I mentioned just now, different transaction within the same, there's a small bedroom and a big bedroom.
Yeah.
So the difference in PSF is very, very great. That's something to just take note.
So if you're on podcast right now and you're hearing all the numbers, the trend line, the charts, right? Head on to our YouTube and you can see the actual fake photos and the pictures of it. I'm very interested in Icon. Let's take a look.
Yes, let's go.
Icon has a completely different outlook.
Yes,
167% increase.
Correct.
Because back in 2003, as what I've mentioned previously, is when the market was extremely bearish. You had, not COVID, I almost said COVID, SARS, H1N1, dot-com bust, right? All the way up to 2023. And we have mixed feelings about Icon.
Yeah. Why mixed feelings for you?
Because as what you have mentioned previously, right? If a development has already increased by 167%, how are you going to expect development to increase another 167%? Because there are already buyers who have bought it way back in 2003 or even lower points where they can sell. They don't have to sell at 2008, 3,000 per square foot for 100% gain. A $600 entry price. You sell at 1,002, you have 100%. 2,000%, sell at 1,008. Yeah.
Okay, that's something that I think a lot of individuals in the market will think that way because people bought cheaper than me, so I can't sell at a high profit in the future. Okay, there's some extent to have a certain truth, but at the same time, it really depends on this thing called the resale price gap to see whether, for example, if there's a new launch launching at a much higher PSF right around the area and this resale development became cheap in the view of the new launch, much cheaper than new launch, then that's when it put up the pricing. So at the end of the day, I found out a lot of resale unit that we identified last few years, some of the owners have already made maybe like bought around 12 years ago, 13 years ago, they made more than 3 times.
Yeah.
Like as compared to those that bought in 2003 definitely. But typically it still went up by 20 to 25% because of the resale price gap. But nonetheless, this is very interesting, which actually goes to the point of what you mentioned just now. How can I have confidence in D1? Because at the end of the day, you look at D1, 2003 all the way to 2012, when the price have increased, I found out at the end of the day, it's not really about whether it seems to have no demand or supply, but it's really about the entry price, the land bid prices, whether there's evidence of pricing to hedge against as compared to the entire Singapore. So these are things that we always trace at. And as I mentioned just now, 2012, when there is the peak of D1, D9 and also D2, D4 properties, which is Sentosa, we noticed that there's a drop after that because of this cooling measures. And also, in fact, there is some drop in terms of PR application, population matrix. These are things that we trace very carefully. Until recently, things have changed.
And one thing that I realized amongst all the D1 properties is that surprisingly, there are not many foreigners who are owning this place. Like Skysuites Anson, we are seeing 9.5% foreigners. Eon Shenton, we are seeing 8.2%, 79.9% Singaporean. And then when we go to Icon, we are seeing only 16.7% foreigners, right? So actually, it's quite healthy to see that the demand of these areas also come from locals, not just foreign demand, right? Because that gives a wider pool of demand eventually, right? But most importantly, it's important to see, but based on a particular development, which units are actually the most sought after units versus units that are not very sought after because of the utility of the unit, right?
In fact, Icon, just want to take note. You look at 2018-2019 period. When we bought at 1,006, now it went up to 2,000. These are things that I noticed in the market that back then some of my clients in fact bought at 1,005 only, below the market value, and now it went up to 1,000, 8,009. And these are things that we noticed. At the end of the day, it's not really about the supply, demand, it's all about the entry price. If the price is cheap, that's my postulation that people will catch up because the market always lacks in real estate. Real estate, not everything is transparent, not everything is real time.
There's no perfect information.
So that's when we can leverage on that to make the profit.
Absolutely. So entry price, no matter what you buy, is still key. And that's the reason why as we are analyzing Newport Residences, right, we are showing you the counterparts in the area to share with us all about entry price. Chris and I, if there's just something that we follow religiously for our clients when it comes to investments, with 400 investment clients served, 100%. I think actually I was looking back, right? We said there was a 95% profitability, but I'm saying our clients is 100% profitability, right?
Yes.
But I say 95% because there are some clients who didn't hit above 200k profits, which is what we want average, right? And we realized that the key thing is the entry price, right? Yes. And sometimes you walk into the show floor, you think it's beautiful, entry price is high, emotions come in, you buy, walk into Wallet Residences, take a look at the sea, wow, you get wavered when it comes to decisions as well. Okay, let's talk about the estimated rental then.
Okay, in terms of, before that, let's look at Icon first, in terms of the 2-bedroom transaction. So 2-bed, 2-bath, interestingly, a lot of them, they are all going at actually close to 1.7 million. Okay, this is close to a 20-year-old property already, if you understand a little more, because 1.7 million and the bedroom size are big. Okay, so this is something to think of for quantum play also subsequently.
And do you know, right, that Pinnacle at Duxton just a couple of days ago hit record transaction 4-room at $1.4 million? Yes. And people are always like raving about Pinnacle at Duxton, but they forgot about this very cute development that's right beside called Icon at Golding that entered at 500 per square foot and now people are selling at 1,008. We're talking about a 3 times increase.
Yeah, in fact, my client bought There's a unit at 1.45 there about.
Yeah.
That's wow. Vinegar Duxton price.
Yeah.
Same size, 900 square feet.
Yeah, similar size.
Similar size. Yeah. So there's some things that we are very looking at in the asset class play.
Absolutely.
Yeah. So there's some things that as compared to 570, 700 square feet, a lot of all this, they are the one beta loft.
Yeah.
Which we also try to avoid for investment because of one beta as mentioned.
Yeah.
Or loft 700 square feet, but they're selling higher than some of the two betas around the area for 2 bed 1 bath.
Yeah.
Okay.
Let's talk about the rental. I think rental is important because rental is assured, right?
Yep.
Kind of assured gains, and also rental also safeguards. Is a strong mitigation towards
Yes, indeed.
slight speculative play, which is also kind of sometimes important in real estate because you cannot be like 100% certain, right?
Yeah, right.
Yeah, but you need to make calculated risk. Okay, tell me more about the rental.
Yeah, so as what Joyce mentioned, very important. Rental is like a defensive play to this.
A defensive mechanism, right? In the entire vehicle. Yeah.
Yes. In fact, let's take a look at the rental. The good thing, the silver lining of all tangible property, the rental yield is pretty high. Some going close to even 5+%. Typically, you can see if you draw a trajectory, if R square of 0.62, you are looking at close to, I say, like a 4+% rental yield. If
it's 3,100 per square foot.
3,001, correct.
That's not what I'm hearing in the market.
Yes. So you can see.
Oh, you don't know. Maybe see out after hearing some agents talking on the ground, it's like, it's too high. And then it's like, you want to launch it lower.
Yeah, so it's quite decent. In fact, if you do a normal rental of 11.3 per square per month, that's 4.37% for 3.1. Hopefully, CDR hears this video somehow and then somehow launch before even it's launched. Very interesting. Yeah, so if it's 3.7, which is something that we hear more on the ground right now, it's around 3.66%. It's quite a decent rental yield.
Yeah.
But of course, there are better alternatives out there with this break-even price.
Yeah. And this is just, I would say we are postulating the future rental, right, price, right? And we're giving it about $11.30, right? If it goes back to current market yield at about 7%, $7 per square foot, right? $7 per square feet,
Yes.
then the yield will be way lower.
Way
It will be
lower.
like almost 2%.
Correct.
Right.
So there's something to take note for the PSF, which is about, I say, if $8, then it will be much lower, close to 3+% for 3,001, which is not that great.
Yeah. So this is the end of our slide for Newport Residences. We went very deep into the resale counterparts because I think this is one of the projects that I've seen that I think that we just really want to go very raw about the analysis, right?
Yes, indeed.
Before you buy Newport, or if you have any friends who are just buying Newport, you got to send them this video, share it with them before they head on to the show flat or talk to other realtors, okay? So, of course, at the end of every session, after looking at everything, okay, so maybe I just contextualize it a little bit, okay? District 1 resale alternatives. I'm going to make it harder for Chris now. District 1 resale alternatives versus Newport. Considering the fact of the future rental, the potential of the rental that we are seeing now is about 3.66%, assuming $11.30,
Okay. What's the PSF launch?
assuming 3,007. Okay, let's assume 3.7 first. Then later we go on to 3.1.
Okay.
Okay, so we go 3.7 first. Okay, ready? So it's either buy, wait, or avoid. Okay, ready?
Okay.
1, 2, 3.
Avoid.
Why? Previously you said wait.
As I mentioned, wait because we don't know the entry price.
I see.
It's for me, it's very crucial. I cannot really judge development just based
Before
on
the PSF is
because
launched.
we make wrong. I mean, sometimes you think 3.7, but it cannot to be 3.1 or 2.8 or 2.7.
Maybe 2.2.
2.2. Then, I'll be like, wow, this is a snap buy.
Yeah.
So there's always a waiting approach to see what is the guide price.
Yeah.
But typically, in terms of even if I go to even 3.1 per square feet or 3.2.
Okay, let's talk about 3.1 now. Okay,
3.1.
Okay, so so now it's purely an investor perspective.
Investor perspective.
Now we see the whole Singapore as okay. The question is just that I want to make most money from the bank for the bank of my park, right?
All right.
At 3,001 per square foot.
3.1.
Tough, right?
Tough. Very tough.
I was thinking.
3.1. Moments of awkward silence. Okay. Right. I got my answer. Is there better alternatives out there? I think that maybe that's the question.
Yeah.
Yep. Okay.
Okay. Buy, wait, or avoid, huh? 3, 2, 1.
Avoid.
Wow. I didn't expect that from you.
Okay. Yeah.
I also didn't expect that from myself actually. Because I'm thinking 3.1 now, RCR region 2.6, 2.8. Freehold, let's talk about Continuum, can be going easily at 2.8. Mayor area is already 2.93K.
Yeah.
So why avoid?
Okay, for me, it's always a comparable. I mean, I know that around the area, I mean, or even within Singapore, there are better products out there that can fetch a higher yield as compared to this 3-1 per square feet, holding for a new launch kind of concept. So these are always comparable. Unless I cannot find another product, then maybe it's something that is worth considering.
Same as you, right? I feel that there are there are places where you can be safe to know that there's going to be ease of exit elsewhere. And I like how you buy Marina 1, right? Or I like how you have been trading in D1, right? You always buy the unit upon completion and you maximize the rental yield so that, you don't pay for the mortgage, right? And there's that safety, that defensive mechanism inside. But for Newport, I don't know, even with progressive payment, I can't rent it out for 7 years, especially in the place where I'm not too certain about the exit strategy. I think that, 7 years or 6 years is 2 cycles for me to invest. I'll rather avoid. I wouldn't consider a 3-1 there.
Yeah, true.
Wow. This is the first project we say avoid. Okay, so disclaimer, okay, before we get any complaints or lawsuits, is this, okay? Everything stated here is and only is our opinions, okay? It should not waver or it should not affect anybody else's opinion. You should not be treated as financial advice as well. We just want to be as objective as possible, right?
Correct.
And
so I'm not saying that 3-1 will lose money.
No, we're not saying that.
Yeah, I'm not saying that.
There are better alternatives.
I'm better alternatives out there in terms of investment, pure investment. But if you really love Tanjong Pagar and own stay element, I mean, there's something that, you trade off in terms of investment. So these are some things we are be objective in terms of numbers and figures rather than simply just buy.
I'm going to create a TikTok hook reel right now. I'm going to look into the camera there. This is the first ever project that we ever say to avoid and not to wait. So you got to stay tuned and you got to watch this video.
All right, you just did it.
I think there are more.
Yep, there will be more.
In the start of the video, in our humble opinion, we feel that there's only like 1 or maximum like 3 that you can consider. And we haven't talked about the units yet. Right? And there are like, how many launches this year?
Close to 30 plus.
Close to 40 plus, right? And 30, it's 30 plus 40, right? And there are so many other alternatives. Resale alternatives are great this year, I feel. Right?
Yeah, for some developments.
Yeah, for some developments. Okay, thank you so much for watching this episode brought to you by the JNA Investments team called Singapore Real Estate Explained. If you're on podcast, thank you so much for hearing us. If you're on video, thanks so much for watching us as well. If you haven't joined the Telegram channel once again, please go and join the Telegram channel. This is where we have good lobangs, okay? And if you want to contact us for any real estate related inquiries, you can always hop on WhatsApp call. This is not our number. This is a central JNA real estate number where our client care executive will schedule a Zoom consultation with you. And a Zoom consultation usually will take about just like 30 minutes to 40 minutes. It won't be too long, right? We answer the questions that you have and then we'll just move on, okay? If you're asking us why we're doing all of this, what we're doing, it's called passion. It's called calling. We love what we're doing. We love analyzing real estate. Just nice. We can make it's fine. Just nice. We can make it our full-time job, thankfully, and we can be fed by this career. Thank you so much for watching. This is Jervis.
This is Christian.
And we'll see you for the next episode. Bye-bye.
Bye.